Hey guys, this is Elliot Wave Sage. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So I want to give a 2025 market outlook. Going into last year, my market outlook was stay long the indices. And we did that all the way through July, and we sidestepped that August flash crash brilliantly, and then we moved into trade in small caps, which most of them pumped. We got in almost a majority of the ones that pumped, and now where we position ourselves going into 2025. Well, I want to position myself in beat down cyclicals, eventually energy if it could drop, but not now. Crypto if it could drop and finish its correction, I want to be in that, but not now. But I want to be in those. I do what I don't want to be in. I really don't want to be in big cap tech. I really don't want to be in the household names, the names that you love and cherish so much. I want to be in a lot of obscure stocks that are so beaten down that need room to the upside so that they can collapse later when this bubble pops. If you believe the bubble's going to pop now, you're believing a lot of those stocks will go out of business. I mean, will Cleveland Cliffs go bankrupt? I don't know. Is the uranium sector, the uranium miners, gold miners going bankrupt? I mean, that's what you would be betting on if you believe the market should crash like right here, right now, a financial meltdown type crash. There's just too many sectors that are too beat down that need to pump to give it space to drop. That's what we saw in '08 and '09, and I believe we'll see that again. And I believe that's what this is showing in this updated view. I had this as an end in diagonal, and I decided to go with a more classical label. And I looked at RSI and just changed it a little bit. I still think the destination is still the same. A great crash will happen probably during Trump's presidency at some point. Now, we could trade sideways through that presidency, but coincidentally, it looks like we break the trend line here around 2028. So perhaps Trump could keep it together, and then after he leaves, then we'll get the big meltdown that everyone's thinking, and that would be right around the 100-year time frame, right? Anniversary of the '29 crash, ironically. So that's possible, but I don't worry about that too much. I just think right now what I'm seeing is one more marginal high, one more in the industrials. So a lot of industrial stocks show that we could go higher. We have Caterpillar, we have GE, we have Iron Mountain, and I posted those yesterday. Could make one more high for good trades. We top out, and this higher degree wave 3 of 5 that I have here, and we'll get a big drop in 4. I believe that will happen in 2025. A big pullback, but this should be buyable as long as we stay about this 30, this just trend line. But regardless of where we end up here, it's buyable, and I'll explain in a minute why. Because one, you'll either get this fifth wave, and then you'll get probably to 50,000, and that should do it. And then either we'll get a super crash, or we'll gently pull back in a series of ones and twos, allowing Trump to kind of finish his presidency as sellers are building their position, their shorts, and then he leaves and it all hell breaks loose. Now, why do I say this is buyable? Well, if we look at this wave, you have to be intellectually honest and tell yourself there's only 3 waves in this wave 5. There's only 3 waves in this wave 5. And you go, well, why do we think it's a wave 5, right? That's the first thing you want to say. Why is this a wave 5? Well, if we look here at this chart, you have your 3 of 3 here, and then you have your 4 wave of your higher degree cycle right here. And so if you go back and look at the labeling of this leg, which is very important, right, to get this right, because if you don't have this leg, then you won't have this leg right. So if you look at this labeling of this leg, to me, again, I'm not an expert, but it looks like a 1-2 here with a 1-2-3-4 with a 3-4-5, something like that. That's what it looks like to me. And again, I could put the 5 there and put the 3 there to call it a flat, whatever. It doesn't matter, but that's what the way the cycles line up. That's how the cycles line up, which is the 3 of 3 moment right there, and that would be the 3 of 3. So here you have your 1-2, your 3, your 4, and now you're in 5. Now, why do I think we'll get one more high? Well, I think we need monthly bearish divergence. We've seen that at all the peaks. So as you could see here, you have a higher high with a lot of monthly divergence, right? Signifying a major top, right? A lot of monthly divergence here. Also, it's hard to see within this leg, and it's hard to see it, but this wick here came with a lot of monthly divergence. You could see that monthly divergence. We have made a higher high with monthly divergence on that wick right there. If you could see how I line it up, look, I'm lined up on that wick, and you could see where we have monthly divergence. So we did have monthly divergence. You don't have that right now today. Again, you go back to the major peak here in 2007 here, and you have monthly divergence. So we see that so I think we need that monthly divergence. We need to see monthly divergence. We need to see a higher high with a lower RSI at the peak, and we don't have that. That's why we need to see this top. We need to see that. So what we need to see on the RSI is we need to see this arrow come back up. We need to see price at a higher high with a little bit of monthly divergence. That would signify you're in grave danger that this wave 5 is in. But until then, we're still in 3. Until that happens, we're still in wave 3. Now, my count, looking at this wave subdivides, I think we could make one more high. Top out right around the inauguration, pre-inauguration, and then we have a big pullback in wave 4. That will be scary. This will be could be a crash type wave. It could actually be a 1987 style situation where you just wake up one day and we're down here, but I believe it's viable for this final push higher in wave 5, given that the sectors that I mentioned really don't have the room to go unless you believe there's a massive calamity on our hands. And I think we should be obvious to know what that is if that happens, because it would be a financial Armageddon. Because many of those other companies will go out of business because there's just no more room on their charts. They'll go out. That's what you're saying. They're all going to go bankrupt, out of business, if this isn't labeled right. But what this fifth wave does is allows those sectors to really pump. The stocks that haven't will really pump, and the sectors that haven't will really pump. And then the other sectors could trade down the sideways, and a few others collapse. So that's why it'll be this fifth wave. Underneath the hood, it will be kind of mixed messages. Now, why do you want to buy it again? Well, you want to get the fifth wave, or you could have a 1-2, 1-2, and the fifth wave extends even more crazy, right? So you could catch that, or there's the moon boy scenario where you have a 1-2, 1-2, 1-2, 1-2. And we actually accelerate and we take out this peak in a historic melt up that we've never seen in our lifetimes. Circuit breakers on the upside. The market shut down because we're over 8%. We can't open because it's opening up so high. That's what we'll see in the that's the moon boy scenario. So you have a 1-2, 1-2, scenario 1. You have a 4-5, scenario 2. You have moon boy, 1-2, 1-2, 1-2, 1-2, scenario 3. So you have 3 scenarios that say you should buy this dip, and then you have a 4th scenario that says this is labeled wrong, that this is actually a 5th wave, despite everything I just showed you, and will collapse. So you have a 3 out of 4 chance to get this right by buying this pullback when it happens. Okay? So that's why your odds are in your favor to buy this. Where do we think the pullback could happen? The pullback could happen around the 618 if it's a wave 4, somewhere around here is the area. Again, this took a long time, overlap. This should be fast and quick and violent. And that's what the yen is telling you. The yen is has rebounded. It needs to strengthen rapidly. It's way over it's oversold. That's going to create a massive drop, right? We know I believe this wave 4 will feel like a crash. Many will declare this is the end of the markets because of how it will go down, but it won't be. It will be buyable for those brave enough to take it for this fifth wave. That that's what I think will happen. So I think 2025, the story around 2025 is a lot of traders will lose their positions. A lot of traders will get chopped up. A lot of traders will buy calls and then wake up one day and have all their money gone. And I believe traders will get in puts and lose all their money as well. And I believe the best strategy is to trade in and out of positions and scalp and then wait for this historic drop this day, this week, whatever time, and then use this as an opportunity to try to go long and see if how this wave 5 plays out. That's what I think is, and I do believe this year, if we look at the way this will play out, is more than likely we will see little to no gains throughout the year. We could probably make another high, and then maybe maybe if we're lucky, 26 you could get the peak of the markets. Maybe the end of 25. Maybe we'll get a real Santa Claus rally in 25 and get this peak. But I believe that this is where we're heading this year. So unfortunately, the buy and hold investors won't have a lot to show for their dedication. But the traders that are nimble enough that can get in and out of positions will really benefit. And if you really could get into the beat down sectors when these start to drop, that's what you want to be for this wave 5. The wave 5, yes, some big cap tech could make a new high. Some will just make connector waves. But many of the other beatdown sectors will really pump in this fifth wave when this happens. And if we're lucky, you buy this and you're in the bubble, the mania continues. So it's a little different forecast than what I had earlier, only because I went with a more classical labeling of the Elliott wave here, of this fifth wave, versus trying to force an ending diagonal, a 3-wave look, which again, odds of that is 1 in 4. There's a 1 in 4 chance, and I think that the odds are lower given that there's so many beat up sectors and cyclicals already that just don't have the room to go down unless you believe it's financial Armageddon and many of those companies will go out of business. I mean, a lot of the small cap will all go out of business. That's what this is saying if you believe that it's 5. So again, just taking a fresh view into the new year, this is kind of what I look at the market now. Right now, I do believe that we are going to see a big decline this year in 25 that should recover, should be buyable and recover. And there's 3 scenarios that say that you want to buy that. And then, so I think this is buyable. So I would be smart to raise some money, have some cash to deploy, and then let the market decide where we end up with the scenario. The other possibility, like I mentioned, could be a 1-2-1-2, 1-2-1-2, as long as we stay above 28,000. So this could also feel like a crash to a lot of people as well if it's a 1-2-1-2 and wave 5 extends. Let's go to the SPY and talk about what that would look like. So the SPY has a lot of room here. So this wave 4 could find support at 510, 512, and continue higher for one more high. We could see 620 in the next several weeks, and then a massive drop to 520. Again, crash type move with another high after that. But the other possibility is like I said, a 1-2-1-2 and wait in the bubble, and the mania continues. And if that's the case, as you know, wave 2 could go all the way down. In fact, we could come all the way back down to 374, 364. God help us. Oh my God. Right? It could be a 1-2-1-2 like that. As long as the RSI stays above this level. And you could see we could drop a long way on the weekly RSI. So this is possible right here. 1-2-1-2. We drop all the way back down. And this could be a crash. This could be a crash, right? This could be a crash. This could happen in 2025, this scenario in the SPY that I'm showing, or the indices too. So this would be a crash, right? This would be, investors would say, oh my gosh, I lost all my money, right? We went from 600 to 402, and it was that. And guess what? The bubble still will continue. So we need to prepare for a decline. Since I think a decline is coming, I do believe when this 4 comes, it's 50-50. Whether you get a 4 and a 5 like this, or you get a 1-2-1-2 like I just showed. 50-50. So this decline is buyable, but we don't know, are we going to get a 512, or are we going to get the calamity back down to 380-400? But either way, those two scenarios I think are viable because it's a 1-2-1-2. That's what I'd be thinking. But that would be a crap, right? Wouldn't it be? It'll be horrible, right? It'll be horrible. But I don't know if some of those sectors have the room to go down that far. But they might. Big cap tech may be that overextended, and it may be able to do that. And again, the Dow Jones, could also show a 1-2-1-2, but its decline in the second wave may not be as severe, right? It may not be as severe. So this could still be a 1-2-1-2 like this. Again, just looking at the wave. And again, it could even technically come back down to 34,000 even. So in 2025, you need to prepare for a lot of selling, But once we're in the wave, we'll know: is it a 4 or is it a 1-2-1-2? But either way, I think it extends because of there's a lot of sectors that will provide the floor to the market to keep it going in 5. And I also think there's other stocks that can make new highs, big cap tech. But a lot of them you don't want to be in, because they'll make highs, but I think you'll get more money in other sectors as this plays out. So here it is. So again, it could be a 1-2-1-2, a 3-4-5, or just or it's 1-2-1-2 in wave 5, or it's a 1-2-1-2-1-2 in a massive wave 3, which means this should be very shallow. You wouldn't want to see a deep retrace if that's the case. So we're going to see a sell-off. So Moon Boy scenario would be if it's 5. I think if we could hit 514, 512, then either the wave 5 finishes with one more high with a lot of divergence at the monthly drop. Moon Boy scenario is we here and then it just takes off and we just don't know what happened. If we break this 512, 520 area, then you're looking at the 1-2-1-2 scenario. And I would be looking for support. It needs to stay above the October 22 lows, which I believe it will do that, given the wave structure. And if this breaks, if we come all the way back down to 400, 370, oh my God, 360, come back. If we come down into those areas and then this breaks, within we had that scenario where this was just an end in diagonal like I had at the end of 2024. But either way, we have this drop coming. And again, I'm looking at it. We don't have the monthly divergence within this wave that I like to see. Other sectors are too beaten down. They need more room to pump. And this will allow it to do that. Allow energy to pump more and everything else. It needs to. It's too beaten down. This doesn't allow that. This would be financial Armageddon. But then something will come in to save the day, and the bubble will continue. And then if I'm wrong and we have top tier, or we'll top at 620 SPY, then it's ending diagonal. Then we'll have a financial catastrophe like we've never seen before in the country since the Great Depression. So either way, you should prepare for selling in 2025. That's what I'm saying here, guys. Yes, you're picking up pennies in front of a steamroller. If you're buying the dip on yesterday, you're trying to play this little bounce. You're picking up the pennies in front of the steamroller here. It could be wrong. This could be done already. We're already in 4, or God help us 2, 1, 2, 1, 2, right? I think I just showed. But whatever we're in, you're picking up. This cycle is coming to an end very, very soon, early in the year, and then we need to wait and see and assess the wave and where we are with how this plays out. So that's my market forecast. You want to have cash ready, you want to sell, but then you want to buy the sectors that are beat down. You want to prepare for a 5th wave. You want to prepare for those things. And I do believe then when this 5th wave is made with monthly divergence within that leg, within this leg here, within this leg, just even if it's a little bit, we see that monthly divergence within this leg. Once we can get that, then I believe we should be good to go. Good to go with the peak. Good to go with the peak. That's what I'm thinking. That's what I'm thinking. We need to see. If we don't see that, then the market has topped. It'll be a historic meltdown. So every scenario has a pullback, right? That I just went through. So one scenario is hot. You have 3 out of 4 scenarios saying to go higher. One scenario says the market's already peaked and will collapse for many years. But all of those scenarios, all 4 of them show this. There's no scenario that just says this just keeps going like that with no pullback. So the odds, so there's a high probability that you're going to get a massive pullback in 2025. But what degree is anyone's guess. I think it's buyable, but we will find out very soon. So you should be defensive. You should be defensive going into January. Going into January as this tops. You need to be defensive. Because like I said, you'll get 4, you'll get 2, or I'm wrong, and it wasn't ending diagonal after all. That's very asymmetrical, very ugly, but I could force the label in and make it finished, and then it will drop down to the 200, 180 level SPY, back down to the COVID lows. So you're gonna get so this drop is coming, and what will stop the drop is when the yen strengthens to the support area that I believe it will go to. Again, the yen has been kind of the way to kind of play this. If we go to the yen, looking for a support area. A support area at 136.6. So when the yen is trading here, the markets should find support. Even if the yen will continue to strengthen, it could continue to extend C, which would extend the bubble. But I do believe the yen is going to make this move stronger, and that will collapse the markets. To what extent, we don't know, and how it strengthens, we don't know. But when we are in this area is when I definitely don't want to be too bearish anymore, because we've seen time and time again, the carry trade comes back, the markets find its footing, and it keeps going. And so the market, as the market makes that 5th wave, the yen could weaken again like that. And then we get the super crash like that with the yen. Something like that. This is the market's 5th wave. This is where you buy it. Or wave 2. and possibly the yen can even extend and then extend this, which would obviously extend the bubble in the market. So, but I do believe the yen should make another leg lower because we made a lower low here. If we didn't do that, there's no guarantee. But I think because of that, the yen should do a rug pull. The yen should strengthen into this area. When the yen is in this area, you then I don't want to be so bearish to market because that's how it was timed in August to find that low. So this is a coming. So this leg should be the signal to know that this decline is over. Whether it's here or a 2, that decline is over. Then we should bounce either to new highs, bounce to new highs, or connector wave, and then have a calamity. But if we're going to do a connector wave and calamity, we'll need to be down here. And this essentially would be your top and calamity. So 2025 will bring a lot of scary market situation for a lot of people, because it's not going to be like it was earlier in this year in this cycle. But when this drop happens and is over, then there's a lot of scenarios that say we should go higher into I think one more high. Some Moonboy thinks, SPY is in the 4 digits. Either way, 5 extends, gets more crazy, or it's a 3 of 3, and you get to unthinkable price targets, or you just trash down. And this is wrong. It's actually over here, right now, and we come down. It's not a 1-2 1-2 either, and it just is over. And this was just some really funky end in diagonal that people will write about in Elliott wave theory, because it looks very, very unusual look to an end in diagonal. So I think this is it. So guys, this is how I look at the market right now, the forecast. So you want to get ready for volatility. You want to be careful with your position sizes. And I do think when this wave comes, it will be fast, violent, a historic tail risk event. It could even be 1987 style, where you just open up down here and it's over before you even realize it even started. And it could be like that type of situation to allow the market to kind of reset the stochastics quickly, because it's so overextended in some areas. But I do believe the other areas that are already beaten down give the market hope, and should give you hope that you have another wave coming. And this should be not the end of things. But anyway, good luck trading. Like I said, we either get the 4 wave, a nice little pullback, healthy, violent pullback, or you get a 2 wave, you come down to 440, 420 with the overlapping waves. Perhaps we nail this trend line right here. 480 even. Nail that peak in a 1-2 1-2, which could still be a 4, but we'd have to look at the RSI as that plays out to see if it's a 4 or another 1-2 1-2. But I think that's what's coming for the market in 2025, and I do believe a lot of investors will lose a lot of money as this plays out, and they won't have the firepower ready to go for here. And if it is a 2, if this is a 2, you could see something like this even in 4, where it's violent A wave, everyone buys the dip, and then it's like, oh shit, and then everyone loses their money here, and it's just a 1-2 1-2, and then we keep going. So just understand the bigger picture, where you're going. So you don't want to put your whole stack in here. You need to understand like how this will all play out, and how you manage your position size, how you take some profit on balances, and then maybe it's better to wait for the confirmation, wait for the crash, wait for don't try to buy the bottom. You just let it play out. You let it rebound. You get a wave two. You come in and you put your stop at the low and see what happens. And if it breaks, okay, you lose a little bit of money versus just guessing, and then it just rug pulls on you. So you may want to wait for a little more confirmation, almost like we have right now, the setup right now in the SPY, where you had this big drop, but now you have a pullback. So if you went long here, you put your stop at the 580 low, very little loss, and maybe you get this upside. Very little risk, high reward. Now it could stop. You could stop out, lose a little bit. So that may be how you want to play this when it comes. Instead of trying to guess for, you just kind of wait and then wait for that pullback, which inevitably happens, and then you manage your risk better versus just guessing, because this could have just kept going, right? We didn't know. So this is what I think is going to happen. Good luck, guys. And I hope 2025 brings everyone a lot of good trades and make a lot of money. And again, looking back on 2024, again, you can watch my videos. We were long December 24 at the end, stayed long all the way through July, sidestepped the flash crash, went into the small caps and other stocks, traded in and out of those. And I'll look, probably will be able to get back in where I got out of the market. Well, in the meantime, making a ton of money in all the small caps that are pumping. And then we'll make money on the indices on this fifth wave, or possibly Moonboy if that low probability event happens. That's what we're thinking here. And a lot of people in January and March, they were actually saying leave the market, it's over. But we were holding all the way through that, all the way through this. We held through this. So that was interesting, right? And those people now are bragging. One guy's bragging about how smart he was, but he was the same guy actually saying it was the best time to short the market. It's funny how people forget what they post. But we weren't shorting the market in March. We weren't getting out of the market. We weren't saying any. We were just holding through all that. And that's what ended up being the right move. And we got out right here at that peak at 3. And that whole move sidestepped. And then we day traded all these other sectors and stocks, leaving ignoring the indices. Let the wave 5, because the wave 5 could end anymore, but it's so extended, which is probably going to create the violent move lower as we lose the whole wave 5 very rapidly when this plays out. But that's the count, guys, and that's how I look at it. And I don't recommend shorting this at all, because we don't know how deep the 4 will go. But if you really can't help yourself, 620 would be the right area to enter. 616, 620 would be the right kind of area if you want to, place a short bet. This is kind of the area to do it, but shorts are very risky. This would be where you may want to go long volatility if this plays out. Right, if this plays out, the UVIX, right, is in a decline right now. It should decline a little lower. So that time up everything right. And the yen would be probably at the right moment. So there could be a good opportunity here to hedge positions right in this general area if it takes place in the coming weeks. And then you'll just have to decide when you want to get out of that situation. But I believe the market won't allow you to get comfortable. That's why I think it's just going to be a big flash crash type situation. So you won't have time to hedge. Then the market's just going to, like a lion, come in and tear you apart. Tear you apart, and you won't have an opportunity to know it's short, because we'll just be down here, open up down here, and people won't. It'll be too late. That's how I think this wave's going to play out when it happens. All right, guys, good luck, and that's it. That's all I got today on this 2025 market update.